All right, what is up, everybody? Divine Hood here, coming at you today with an altcoin stream. In this stream, I'm just going to cover three altcoins. I'm going to cover Ethereum, XLM, and Super. So first, we're going to get started with Ethereum here, and we're going to get started on higher time frames here. You can see I've labeled out some major boxes of support here that we've got, and why is that in there? That should not be in there. Okay, major boxes of support we got here, major boxes of resistance, and let's just go over this. So Ethereum, first of all, what I need to say on the daily time frame, this is looking kind of head and shoulder toppy-ish. So if we do right away, let's just look at this pattern. Even though I don't necessarily trade patterns, I do look at them and I do use them for confluence on trades. So we got our left shoulder here, our head up to here, our right shoulder to here, and we could be forming the right shoulder as we speak. If this is to play out, we've got our dump target here. We pull that down to the break of the channel, and it brings us down to these lows down here, this level of support down here. So that's quite a big dump, 2300-ish. We definitely wouldn't want to see that. The target of this head and shoulders, if it actually does play out, it would be a nice swing failure pattern into this last big daily low right here. So that is something to keep an eye out. If Bitcoin has this catastrophic drop to 70K or mid 70s, then we might see ETH come down to 2355-ish and validate this shoulder head and shoulders pattern. So that's just something to be aware of. I'm not really paying too much attention to that yet here. Okay, let's zoom in on ETH here. We first of all can be looking at a couple ranges here. We have our big range from the range of the head and shoulders pretty much. So let's look at that range here, and let me make sure this is pulled all the way. All right, we're close to our value area low. It looks like we front ran our value area low just yesterday, 3 days ago. So something to be aware of, our very local support is the SFP of the low. This SFP into the value area low here at 31.55 to like 31.25 here. Let's just mark this out real quick here. And we will do SFP value area low. All right, so we've got our SFP into our value area low. That's our first box of support here. That is going to be around 31.55 to 31.45. So that's a small area to look at here. That's our first big daily support level. If we make a new low here, we do also have the SFP of this low down here at 3100. We can look at this also, just like we're looking at Bitcoin, as an ABC correction to the downside. So we can measure our ABC correction targets to the downside. So if we go from the highs of wave A to the lows of wave A to the high of B, and check it out, our 1-to-1 target here is right in our major box of support here. So this box of support, I believe, is support. I labeled it support 2. Where's that at? Major support. I labeled it major support. So we're going to go ahead and throw this down into our major support box. There we go. So now you can see we have a lot of support down there. But first, so our first local support, 31.55 to 31.45, the swing failure pattern of the low from 3 days ago into the value area low of the big range. Now let's pull out our medium time frame range here. All right, we are losing. So let me hide this big range here, and I want to show you guys something here. We are losing our value area low on the daily. We closed the daily candle below it. We tried to back test it on the daily candle, which happened yesterday, which we're only about 5 hours into today's candle. And we did reject from the bearish back test of that value area low, and now we're continuing to drop. So that is not the best sign to see here on the daily. So it is highly probable that we can come down to take the swing failure pattern 31.55 into the bigger range value area low. Looks like we already did hit our golden pocket as well. So if I do a range pull from high to low, and you can see this wick here earlier today, or I guess yesterday, but yesterday as far as the UTC timeframes, it was earlier today for me. We did hit into the golden pocket. We saw a little bit of a bounce to the back test of the value area low and could not hold it, so we're rejecting. Let's look at the 786 of that real quick, because we do have our 786. Okay, so our very, very local support. I don't know if you have to understand this is very local. So we have the SFP of yesterday's low into the 786 here at 31.91. If we do confirm the SFP and hold the 786, you could take a scalp from here. Now, if you're going to take a scalp from here, you would have to look at another rejection of the value area low. So at 32.66, you could look for your TP1. And then if you break that, you could be looking kind of for these semi-equal highs around the point of control here, which is around 33.41 here, 33.40-ish. And our bigger resistances or supports, our bigger supports to the downside. So we have the anchored VWAP here, and this anchored VWAP, let me zoom back out onto the daily chart here. We're going to check out that anchored VWAP. That anchored VWAP is pulled from the last big lows down here, which were at 2K. And we bounced from this 2K low. Actually, I'm going to continue to zoom out here, and you can see we've been holding this trend really since the beginning of the bull market here, at the very lows of the bull market. So I took this ray, you can see this like peach colored ray here. I took this ray from the very lows of the bear market at 864. Actually, this was 2022, 864 in July of 2022, and we bring it up to the next major higher low here, and you can see it's been respected 1, 2, 3, 4, 5, 6, 7 times, 8 times on major time frames. So this ray here is a very important ray to hold our bull market trend. If we lose this ray here, we could be losing our bull market trend. So let's go into where that ray is, that ray of support is. Now, it's going to take a while for us to dump back down to there. You can see that if it does take till about February, our ray of support is going to be aligning with that box of major support that we have here. And that box of major support is it's a many different things here. So that box of major support, I just showed you, we have the target of the ABC correction. And actually, let me go into this here, and I'm just going to turn on the 1-to-1 for now. So we have our 1-to-1 target of the ABC correction at 28.23. This is using the Bybit chart. We have our golden pocket pull. So this golden pocket is from the lows, the last major lows here at 2000, all the way up to the 4100K highs when we rejected from this pitchfork midline here. So that golden pocket is a macro golden pocket on the daily, from the big last swing daily low to the swing daily high. Our golden pocket is coming in from 2860 to 2800 or 2975, right where our 1-to-1 correction target is. So we're seeing a lot of confluence here. Also, if we zoom out, look at this purple box here. This purple box it's a major support resistance box. You can see back here in January of 2024, rejected. Once we flipped it, we turned it into support. 1 time here, 2 times here, 3 times here, 4 times here, 5, 6 times, held it as support. Finally, we lost it, came back up, resistance, 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 resistance. 5 more times it acted as resistance. So this is a major macro level, a support resistance flip, pretty much since for the entire year. So this box of support here, this purple box, is a real major support. And you can see I kind of narrowed down that support resistance to about 27.19, but really it's more of that box of support. But this 27.19 is just kind of where I put this line of this last prior high here. And you can see that it was really a big support resistance flip. So 2800, 2860 to, like, I would say 2750 here that's only about $100 box of support. That's a major support level to be watching here. We also do have an SFP there. No, that's not the SFP. Excuse me. We have the major golden pocket there. We do now at this point, we would be breaking our bullish pitchfork to the downside, but we could see a fake out of it on the weekly and then reclaim it. So that's important to realize that sometimes on these high time frame pitchforks, you do see fake outs and then we can reclaim it. But this ray of support here, this ray is a very important ray, this peach colored ray that I've been showing you guys. And we really need to make sure that we're paying attention to that ray in general because it's literally been the trend for the entire bull market since 2022. If we lose that, then ETH will be breaking bearishly on more higher time frame structures. That could be the end of the bull market for Ethereum. Now, I know that sounds really crazy and really extreme, but we have to keep an eye on it. Another thing we could be looking at is we could pull a gigantic range and we could do the range of just this entire daily price action since March, the March highs really. Let's bring it right to the March highs here. And our POC is a little bit below our box of support, but depending on how fast we get down there, it will be aligning with our peach ray that is our bull market support line, really, our bull market trend. So that's something to pay attention to as well. All right, now we're going to zoom in here. So that's our two major boxes. Well, this box here, I don't know if I covered this box here. This box of support here is the anchor VWAP. Yeah, I did cover that. The anchor VWAP. And then we also had a couple other things here. It's the bottom of the pitchfork here. You can see it's aligning with the bottom of the pitchfork because it will take us some time to get down there. So let me go ahead and hide some of this stuff, get it out of the way. I showed you guys the lower time frame 786. That's our very first local support. Be careful trading that, especially if we continue with impulsive price action. We do have the lows that I showed you here from a couple days ago. And then this box of support here is our anchored VWAP into the pitchfork band. Not the band, the bottom of the pitchfork. So if we do something like this and continue down over the next few days, our anchored VWAP will be aligning with the bottom of the pitchfork, and that might be our bounce level where we flip. We also have really important SFPs there. So we have our 3K SFPs. We have all these semi-equal daily lows in here that we have a lot of liquidity resting in all these wicks. Really, these wicks from a Friday, November 15th, all the way to Thursday, November 21st. So 6 or 7 days here of wicks that are all semi-equal, that we have a lot of liquidity. You can see people were long and all in through here. So that's liquidity to be taken, especially the low of it here at 3,014. So that an SFP of 3,014 into our anchored VWAP and into our pitchfork band at our pitchfork support at the bottom would be a really good level to be looking. I would be looking definitely for long here and maybe even spot buys. This bigger support is really where I'm looking for spot buys, and that's that 2,800 to 2,750, 2,823 to 2,750 area. So those are our major support levels to watch. I covered the local support levels. Be really careful trading those local support levels because if this is a C wave and we continue down pretty aggressive, we could only see scalps from those levels. All right, now I'm going to zoom in here and let's zoom into the 2-hour chart and let's analyze this 2-hour range that we're seeing. This is a smaller range since December 24th, kind of the same sort of range that Bitcoin had been in. Bitcoin had broken to the upside as well. Bitcoin busted a little higher here. And remember, we took the short right at this high here because we were in that ascending channel into our golden pocket support at 3750-ish, and we took it. Now we got the impulse down. We are rejecting on the daily time frame for the value area low. If I go back to that real quick, I'm going to show you that one more time. You can see we lost the value area low on the daily here, came back up just yesterday, which is today. It's still my today, rejected from it, and now we're pushing to the downside. So that is a bearish signal for me, at least short term, that we could not reclaim the value area low. But let's say the low is in, let's say we're going to see a bigger bounce, even if we come down in SFP that low here at 3155. Let's zoom in to the 2-hour chart again, and let's look at this price action of the last few days here. from the 3750 top down to the lows that we made today. We have a couple things in mind here, a couple big boxes of support. So we do have, oh, and I'm also going to turn on some naked dailies here and some naked weeklies, because we do have this golden pocket. It's really, the value area is close to the golden pocket, but we could wick up past the value area high into the golden pocket, which is also the top of the pitchfork band. That is at 35.38 to like 35.20-ish. So this is a real good level of resistance to be looking at if we do make a bounce, kind of like Bitcoin's making a much stronger bounce today than Ethereum is. But if Ethereum does decide to do a little bit of a bounce and a little bit of a short squeeze of all this price action here, we could bounce up to this golden pocket here. And it's also in confluence with the back test of the band, the top of the band, excuse me. And then our value area has close by. So this is definitely a box of resistance to be watching here. This area here. And then we have a naked daily POC. So if I take that same fib and I change it to a 786, you can see our 786 is right around a fresh naked daily POC at 36.25 to 36.18. So you could look at this as another box of resistance to be looking at if we do break the golden pocket and the pitchfork band. We have this area here to be looking at. And then way up high here, we didn't even get to it on this move, this corrective B wave up, but we do have a naked daily above us as well. And this naked daily above us, if we do a small fixed range volume profile of just this top upper price action here, you can see it's right around our POC of that range as well. So that's an area we could be watching. Now that's way far away. We don't even want to look into that until we start breaking some of these other resistances to the upside. And okay, let's look now at our naked weekly POC here. We do have a naked weekly POC. Okay, so going back to this first major box of support, it's actually in between these two boxes of support, but I actually would include it with this box here. That's kind of a big box here. Near our naked weekly POC is at 2,900, so that is close to our golden pocket at 2850, 23 here to 2859. So we do have this area, this general area here from like 3,000 to 2750 is a major support level. We have multiple major confluences of support here. So, and that's all, remember, that's also the finish of our C wave if this is an ABC correction. So if we come down to these areas, these are going to be major levels to be watching here for support. I just covered that local 786. That's our very, very local support level. Okay, so this box here is the box that I was just showing you guys. I just kind of extended it, so let me get rid of that one, and we'll keep this one on the chart here. The swing failure pattern at 3K into the anchored VWAP of the 2400 lows into the bottom of the pitchfork. All right, so we have our major support levels below us. We have our local support levels that I showed you guys in this area here where we're kind of trading in now. If you do think that the low is in and we're going to make a higher low on this dip down that we're seeing now, then you could be looking in those areas. Once again, it's going to be, let me come back up to here, the 786 into this low that we made yesterday at 31.91. If you think the low is in, I don't think the low is in. So I do think we might see a scalp opportunity from here. But if it's a scalp, you need to play it as a scalp and take profit in a lower high that's going to be created. Once that low is created, you can pull a fib from that, and you can do see if the fib has any confluence with the value area low. Retest again. If it does, that's a TP level. Now we also do have the SFP of the lows here. Let me see, where was that? Yeah, the local SFP of the lows, and that was into the value area low of the big range. Yeah, right here. SFP into the value area low of the big range. So there was the value area low of the big range as well there. not this smaller range, but the big daily head and shoulders range from November 11th to present day. The value area low was right down here below this SFP. So that's our second level of support, and then our major levels that I've covered. To the upside, we do need to pay attention to this POC here. This POC is a little bit below our back test of the pitchfork band, but this pitchfork band, you can kind of see this trail of liquidity that's running here. We do have the highs of that trail of liquidity, the SFP of those highs right into that pitchfork band, because it is going to take some time for us. Maybe we come down, grind down here, then come up to here. We do have that as well. So that's a local level of resistance to be watching, the SFP, if we do see a short squeeze of all this price action here. And then, yes, we do have the value area high of the range, the medium term range, into the top of the pitchfork band up here. And it was also our golden pocket, 786 here. So that is going to be Ethereum for us. Next, we are going to go to XLM. All right, so let's check XLM here real quick. All right, guys, so XLM here. Let me zoom out onto the daily chart. We're going to look at some things on the daily. I already did some TA on this. I know this looks really messy right now, but we're just going to analyze this. So first of all, we are in a bigger descending channel, just like XRP is. You can see we had this huge pump up, and now really since November 24th, since Christmas, November 23rd-ish, we've been trading in a descending channel on the daily time frame. And this descending channel, let me clean some of this up for you guys so you can see this. Oh, I don't want to turn off the channel. All right, so you can see this descending channel a little bit better now. Let me hide this pitchfork as well. Here, this is on the daily. You can see how well it's being respected here. We did reject from the top again a few days ago, and now we're dumping. So if we do a very local Fibonacci pull from the last daily low to the high, you can see that the 786 is right around the midline. And then if we take it from the low of the channel here, you can see our 786 actually aligns even better with the low of that midline, because that midline, it's probably going to take us a couple days to get down to this. So that's at 34.9 cents, 34.91 cents. That's our first local level of support here, if this is going to continue grinding down. Now, one thing I do need to say is this does, if we analyze the volume of this structure here, this what we could call a daily bull flag. Let's go into the volume here and let's look at the volume. You can see on the pump to the upside, what we call the pole of the flag, you can see volume is increasing on the entire pole of the flag. And then once you start the descending channel, you want to see volume decreasing as the flag is forming. And that's going to give you volume confirmation that this could be a confirmed bull flag, as far as, because there's a lot of fake outs of bull flags in crypto, because they know market makers know that retail likes to trade them. So, but most retail does not pay attention to volume confirmation to make sure it's a valid pattern. Now here we are seeing a valid pattern here. The increase on the flag, the pole of the flag, and then once the flag starts forming, we're seeing decreased volume as the descending channel flag is forming. So we do have some confluence there to say, to speculate this might be a valid bull flag on the daily. Now, I'm not even going to measure the targets for that. If you want to do that, you could do that yourself. I just don't know if a move like that is very possible. Everything's possible in crypto, actually, but I will measure it for you. So if we are at the current lows right now, you take it from the lows of the flag to the highs, and that is going to be around $2.29 up there. That would be quite a big push up. Okay, so now we're going to go into higher time frame stuff here. Let me turn on some of these, actually, because that's resistance. We're going to analyze real quick the volume the fixed range volume profile. So the volume profile of just the channel, the descending channel. You can see right now we are holding the value area low, unlike Ethereum that lost the value area low and back tested it. XLM pumped up to the top of the channel, rejected, but we are seeing it hold the value area low here of this big daily range since November 24th or November 23rd here. And we got a nice bounce today up here, but it does look like we're starting to continue down here on the daily. So if we do lose that value area low, remember that 786 around 34.91 is an area to be watching for a local support if you do think this is going to make a higher low and continue. Now, it is very possible that we just continue to grind down in this channel for a few more weeks and just allow the pattern to form a little bit more here before making a big daily bust to the upside and starting to break out of this big channel here. So we got some, let's look at our fair value gaps. So we do have the fair value gaps. If we fill the fair value gap, we could fill the fair value gap into that 786 and into that midline. So that 34.91 is looking really good for our first local support there. Now we do have some pivot points too. You can see right now the value area high of this range is aligning with our pivot point at 52.85 or 86-ish. That is going to be a possible fake out level because you can also see we do have that liquidity grab from this liquidity here on the daily, our last big daily high before we started kind of grinding down price action. So we could do an SFP into the value area high and into our R1 monthly pivot. These are monthly pivot points. So this at 52.86 is a major level to be watching for a fake out of the bull flag and then a continuation down if this is a fake out. Another thing we could do is we could SFP the highs and then fake dump as well. So you always have to watch out for when a bull flag breaks to the upside. Oftentimes in a fake out, we'll just come SFP the high of the bull flag and then we'll continue down, and that forms more of like a distribution range. So you know you have your 1, 2, and then if it's a model 2, it'll make a lower high. If it's a model 1, it will make a higher high. So that's something to be aware of on XLM there. All right. So you do see here as well this local fib retracement that I just pulled, and that's just from this last big daily low to the daily high. Our golden pocket is coming in right below that value area low, so we could see the very, very first local level you could see of support is around that, what is that, 38.35. We could break the value area low into the golden pocket, but close the daily candle body at or above the value area low, and then we could see a rotation to the upside. This 786 is a little bit better, and then the other 786 I showed you from this low here to the high is even better than that because it more aligns with the midline. But that midline 34.91 is definitely a level to be watching for a support level. All right. I'm going to turn off that parallel channel now. Let me turn back the pitchfork on. You can see that we did reject from the midline a couple times. The last time we came up to this midline, we've rejected a couple times. So down below our major pitchfork band of support that's much below us at 23.5 cents, we have our S2 monthly pivot right in alignment with that pitchfork band there. All right, we do have a naked daily right below us. We need to be aware of that. We could bounce from that. If I zoom in here, actually, I'll get to that in a second because that's very local price action that we're not going to look at yet. Naked dailies, okay. We also do see that the bottom, depending on how long it takes, how long we grind down in this channel, if it does take till the end of January, January 26th, which is very possible, a couple more weeks would actually be healthy to grind down here. We do have the bottom of the channel aligning with the bullish back test of this pitchfork band, and it's our S2 monthly pivot. You can see our S1 monthly pivot. We do have a key liquidity grab around there. You can see the lows of the channel, the SFP of the lows of the channel into the S1 pivot is another level to be watching. So that's an SFP of 31.19 cents into 30.4 cents. So that is a box of support to be watching as well. This area here. That is if we break. Now, we do have the naked daily here. This naked daily is aligning close to the 786. Let me turn that 786 back on. It's a little bit lower than that, depending on how long it takes. I do like this 34.91 level a little bit better because it's in more alignment, closer to the bottom, but we would have to see a big flush within the next few days. If our 886 actually would be kind of nice to see as well, because the 886, if you come down and tap the 886, usually you see a bounce from the 886, but then you're eventually likely to come take the low. So that would be nice to see. Actually, let's just do this. Yeah, and our 886 you can see is right on top of that naked daily point of control at 33.14. So that is a level. Say we do something like this. Say we just continue to grind down here. Maybe we lose the value area low, back test the value area low, and then we start dumping down here. We could see that, and then we could make a lower high, because if you hit the 886, you're expecting a lower high to come in, and then we could come down to SFP into this level here. Now, this is all speculation. You just need to be aware of the major levels, and you're going to look for your confirmations when you're taking them. You're going to look at your market cipher B, and you're going to be looking for bullish divergences or bearish divergences at highs. But you just want to have the key levels on your chart, have them marked out, and have a trading plan set up and ready to go. Have your invalidation. So, for instance, for this S1 trade here, this let's say we swing fail pattern this low into the S1 pivot. What you could do is let the swing failure pattern happen, hit the S1 pivot, and then if we start bouncing from the S1 pivot, you could long it somewhere in here, and then you put your stop below the S1 pivot, or you could, if you really wanted to be safe, you could let it wick into here, hit the S1 pivot, wait until we start to reclaim that liquidity level, and the second we start reclaiming it, you could long it at the liquidity level at that 33.119, and you would put your stop below this S1 pivot. And then you would bring it up to a lower high or a higher low, whatever you look at your targets then for take profits. All right, let's check this out. Yeah, so this is that swing failure pattern I was talking about into the R1 pivot, and it's also the value area high of our range. So we have a lot of confluence up there around 53.15 cents for a resistance. That would be a higher level of resistance, though. It would be the fake out of the bull flag. We also do need to watch this last big daily high here at 48.57, because we could see an SFP of this. Remember, the market runs off liquidity. So if we do bounce from this value area low here, let's just speculate on this. We're going to hold this value area low. We're going to come up. We're going to flip this POC, which would be around the top of the midline. We reject, or the top of the channel. Say we hit the top of the channel, reject for a day or two, but hold that POC, pump up to this pitchfork midline that you can see has rejected us the last couple times we've touched it. We could SFP the prior highs into the pitchfork midline and dump there. So that 48.57 to about 49 cents is a box of resistance to be watching as well. This here, we have this box of resistance here, which is the S1 pivot. So let's do, or R1 pivot. So R1 value area high, SFP. All right, so we got that in that box there. This box here, we could do SFP pitchfork midline. So SFP into the pitchfork midline. I did cover that golden pocket right underneath the value area low, but I'm not going to put a box there because I just think it's so local that if Bitcoin decides to dump and continue the C wave correction, XLM is going to continue. But I will make a box of support. I'll make a couple boxes of support. We have our box of support down here, the 786 into the channel midline. 786 midline. All right. And then now, if we do have that, we would also be filling a lot of imbalances within this huge daily candle that we had. I bet you if we check, there is a lot of, there's probably a fair value gap there. Yeah, so it would be filling our fair value gap too. All right, so that's very important because you can see this huge daily fair value gap. If we lose the value area low, we're going to be entering this fair value gap. Remember, when you enter a fair value gap, it's like a magnet to suck you through it, and it will usually push you all the way through it to fill the gap. So let's also put here, it's channel midline, but fair value gap fill. So we have a lot of confluences of support here at that 34.91. 34.91 is looking really good here. Now you can see our bigger fair value gap that's down here on the daily. Oftentimes, the first time you come to a fair value gap, you will bounce from the fair value gap and try to make a move up. And then if you re-enter it again, you usually fill it. So you can see the SFP into the S1 pivot. This purple box would be like kind of a beginning to test the fair value gap. And if we do bounce from that support, we would go. If we lose the support, we're going to fill it all the way. I bet you if we zoom in on other time frames, we can find a fair value, like a 4-hour fair value gap that's in here that would probably be real nice, that would align with this box here. Let's just check real quick. So our 4-hour, we'd be looking for a fair value gap in here. Yeah, see that, you guys? I could just see that from the candle body that we saw, but we have our filling of our 4-hour value gap. Now, this is a perfect example. This 4-hour fair value gap was created way back here in November, but you can see the first time we came down to it, we touched it and we bounced from it rather than coming into it and filling it. So earlier, just now, I was talking about coming into here and bouncing from it rather than filling it, or it was this big daily one here on the, if we go back to the daily here, we could come down and bounce from it just like we did on this one as well. You can see the beginning of the fair value gap was also the value area low. We came down to it, we touched it, but we bounced from it. So if we do come down here and bounce from it, now I don't like how our box is within the fair value gap, even if it's just a little bit. So I think that 4-hour fair value gap is a little bit better because we could fill that 4-hour gap, which is right in our box here. You see the filling of our box, it's right in there. So we can click on this. We could say this is fair value gap fill. Let's do this. 4-hour fair value gap fill. S1 monthly pivot. And then SFP. All right, so that's an area to be watching. I know this chart looks really messy right now. And then our major support down here, our major support box down here is the naked weekly POC. And a naked weekly POC is really good. It's also our S2 monthly pivot. S2 monthly pivot. And that is the pitchfork band. And I do believe there was a bigger golden pocket down there. Let me check that out. Not that one. No. Okay. No, I don't like that. I do like, though, how this golden pocket, let's see, we're going to, wrong thing. All right, based off log scale. We have to have our fibs based off log scale for this big pull here because it's an over 700% move. Wait, why did I do that? I'm going to turn off those pivot points. Let's delete this. So XLM, we have our major boxes of support. Well, we have our first box of support around that 34.91 area. We have our second box of support around 31.19, 31 cents, 0.19. And then our major box of support down here around 23.8 to 23.2. To the upside, we do have, looks like we're going to try to bounce from this naked daily point of control right now because this was fresh still. So we're coming down to that now. To the upside, we do have the swing failure pattern of the highs into the pitchfork midline around 48.5 to 49 cents. We can also do some local targets here of just this price action of the last couple days move down. So we can do a fib pull from the highs to the lows that we made. And let's do our golden pocket. Let's do our 786. We do have the 786 into the top of the channel because it's going to take some time to get to the top of the channel there. So around 46.45. Now this, you got to be careful with this because we could break out of this channel and see an impulse to the upside. So you really want to make sure you're seeing bear divs here. You really want to make sure if you start to break out of the channel, you get out. Like if you swing fail this here and don't close. So we do have our SFP here into the 786 SFP in the top of the channel here. This is local. If you don't SFP that, and what I would be watching for is like an hourly SFP of this, and then I would want to close that hourly at or below the 786, and then you would want to see a dump right away. If you don't see that, get out right away. Have an invalidation right away because we could pump up to here real quick, or we could go much, much higher. And then we have a box of resistance way up here. It's our swing failure pattern into our value area high at 53.15. There. And then we could trade a smaller range as well. So what we could do, let's just look at this price action since December 24th. This is kind of like Bitcoin's smaller range since December 24th. So we can pull it right after that impulsive candle here across to the side. And look at our value area highs also there. So we're going to add another, we're going to add to this. Come on here. So the value area highs there, you can see we're rejecting from the POC right now. Okay, locally here, we might have our golden pocket. Okay, all right. So our very, very, very first local level of support. This is going to be if you think that we could see a weakened bounce from here, actually. This would be nice to see a weakened bounce to make come up to make a lower high and then come down. So at 38.34 to 37.81, we have our golden pocket. Here, golden pocket into value area low, and it's also the SFP of the lows that we created earlier today. So this is, we're going to say SFP into GP into value area low. All right, so that's looking pretty nice there as well. Okay, if we're gonna do this, you guys, let's say this plays out over the weekend. Say we're gonna come down to this area here, and we're gonna SFP into our golden pocket and into our value area low and start to see a bounce. You're gonna want to be seeing bull divs. So lower lows on the price action, you're gonna want to be seeing higher lows on the momentum waves, and you're going to want to take it only if you see bull divs there. I'd also want to zoom in onto like the 15-minute chart to make sure money flow is rising, and you probably want to see low time frame bull divs as well to long this pocket here. But this SFP into a GP and a value area low actually looks really nice, at least for some sort of a bounce here. So that does look like a weakened scalp long opportunity. All right. That's about it for XLM here. I'm going to go into Super now. Okay, Superverse here. Let me zoom out here onto the daily chart. And let's look at what we got here. All right, so one thing I see right away, this level of support is looking really good. So we have our golden, our Fibonacci pull from the lows of the pitchfork to the highs that we rejected at on December 24th. You can see our 0.5 is at the bottom of the pitchfork, and it's a naked weekly POC. So this is a major level of support that we want to hold because it's our bullish pitchfork, the bottom of it. So let's do this. Pitchfork 0.5, which 0.5 is often the target of a correction. That's why I have the 0.5 there, because if this is a big impulse up, so let's go here. If this is a big impulse up, this is a corrective wave before another impulse to the upside. That's why I have that 0.5 on my chart, because we need to be aware that this could be a corrective structure before more explosive price action to the upside. So the 0.5 was there. Also our naked weekly POC. All right. Now, if we take that same fib and we change it to a golden pocket, and we make sure it's on log, because that move is, I think, over 1,000% move it was. Our golden pocket, I don't like that so much, but let's do the 786 here. Yeah, that's kind of a big area to be watching. All right, so that's not super nice there. This SFP into 786 does look kind of juicy here at like 54.15 to 55 cents, 58 to 54.15. It's not my favorite though. So let's turn that back on. Let's turn that back off. Let's leave that how it was. So you can see we have a lot of naked daily points of control above us. The first naked daily point of control, and we're also hitting the weekly level right now. You can see this weekly level has been a super important weekly level here. Resistance, 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 resistance here. Finally broke it. Support, 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 support. Now we're coming down to support again. So even though this weekly wasn't created through all of this, it's also an important support resistance flip level. So 1.165, where we're at now, where we bounced from earlier today, is an important level. Or I guess that was the 9th. Yeah, yesterday. It was an important level to hold. So we're at this important level right now. We did SFP these kind of semi-dual lows here, and we're not seeing much of a bounce though. But if we do see a bounce from here, we do have our naked daily point of control at $1.51 that is at the back test, the bearish back test of the pitchfork band. Let's do a Fibonacci pull here. Let's go from the highs of the move that we saw to the lows here. And let's turn on our 382. Okay, so our 382 is right on top of our second at 157.9. And remember, if this does take some time, so let me hide this naked daily point of control here. If it does take some time here, say we're going to bounce here and it takes some time, kind of chops around for a little bit and then comes up to this, we have a lot of confluence up there. The bearish back test of the band, the 382, which often rejects us in a strong trend, and this could be the start of a stronger trend to the downside until we get to here, and then we could see the next big impulse up. Actually, it wouldn't line nicely with our timing wise though. All right, so this is a multiple confluence level of resistance up here. 158, 382, bearish backtest of the band, and our naked daily point of control there. We could do a smaller fib pull from here to here, and let's look at the golden pocket. All right, and we do have a smaller golden pocket there as well. So you guys, 158 is a level to be watching for sure. We have our weak liquidity grab right above it as well. So we could wick to the liquidity grab, close the body of the candle at or below the golden pocket, and then dump. Now, I do like this as well. Let's look at this right now, you guys. So we have the lower highs. Like, let's say this is a descending channel. We're going to go into that in just a second here. But we do have, let's make this channel. If we go from this high here to this here, put it down here. You can see the midline is kind of bouncing us here. We do have this kind of second pivot of this channel here. The SFP of that into a naked daily point of control, and it's also within our pitchfork band. Depending on how fast we get up there, it could be around the top of the pitchfork band. If we kind of make a bigger move up here, break this to the upside, hit here, then hit here. That's something we could be watching. If it takes a while, though, if we chop for a bit in the pitchfork band, which is often common, we could come up to the naked daily up here at the top of the pitchfork band and then dump 2. So 2.03 is another naked daily we need to be looking at. What was this? Okay, that was that naked daily. Got our weekly there. This daily's been taken. You can see we did a hit into that daily before we got this dump here. Now we do have a brand new daily level. Let me get rid of this. Brand new daily level down here that just kind of formed. That's at 120.3. But gosh, I don't know. I mean, let's zoom in real local here onto the 2-hour chart, because let's do this. If we just do a fib pull of this very little local move. Okay, it is at the golden pocket here. So 120 is a very, very local. Actually, let's see. This was on the 10th. So yeah, that daily was made from the 9th. So we came in and touched the daily already. So I wouldn't, let's actually, and we also touched the golden pocket already. So never mind about any of that. Let's get it off the chart. We already tested it. We already bounced from it. It was also our midline of our channel. And we're not seeing much of a bounce from it. So disregard that last little bit there. All right, just locally here on this 2-hour move down, we could do a golden pocket pull from the rejection of the top of the channel to the bottom here. You can see if it takes some time, we do have quite a nice alignment here. The top of the pitchfork, or the top of the channel, excuse me, in confluence with the back test of the pitchfork band, and it's our golden pocket there. So that's that 145.4 level here. This would be a box of support to be watching. So that's a GP, pitchfork, band, and then we also have our channel. This 158 looks good though, guys. This 158, we have the bigger GP there. We have the bigger 382 there. We have a naked daily there, and it's within our pitchfork band. And then the SFP up here into our naked daily at 181.7 to 183 would be really good. Let's mark that out. SFP into naked daily point of control. Oop. Let's go back. Let's do the 12-hour chart. Ooh, those are so small. I'll leave that one there because that's more local. And let's do this one more time. Let's go from the highs to the lows that we just created. All right, yeah, so that's that golden pocket there as well at 158. So we have the bigger golden pocket from the last big daily high to this low that we made today. That golden pocket, and then we also have our value area high there. So let me change this. This box is awesome. So 181 to 182 is a massive resistance that you could be looking to short. We have the SFP into the naked daily POC. We have a golden pocket there, the bigger macro golden pocket of the daily move. We have our pitchfork band there. And we also have the value area high. Oh, is that no? Never mind. But let's take it. Okay, we're looking at this range sideways here. You can see our value area high of this range is also at that 158. So we do have more confluence for that box as well. I'll mark that out in just a second. You can see we're holding the value area low so far. We did bounce from the POC, so this range is being respected. So we'll do another box here at 158. This area here, that is going to be value area high, GP, pitchfork band, and then 382 of our larger pull, our much larger pull. There. I know this chart looks super messy right now, guys. Just try to bear with me while we find all these levels. Now that we did that, I'm going to hide these things. So we have our boxes, okay? You guys can see the boxes. And I'm going to extend this box just a little bit to where that POC was. There. To the downside, we have the 0.5 into the naked weekly point of control, into the bottom of the channel, into the bottom of the pitchfork. This one is super nice. Let's see, did I mark that one out yet? Yes, I did. One last thing we could do is we could do a fixed range volume profile of this entire kind of sideways range we've been in since December. Okay, so we obviously have a naked weekly point of control here, but our regular point of control from this entire range since December for an entire year, from December 2023 all the way to, wait, that was 2023? Yeah, our 2-year range here, you guys. 1 year, December 2023, December 2024. So our 13-month range. We have our point of control there into a naked weekly point of control. So that, what is that, 62-cent level? That would be a spot buy area for me. That would be looking like a spot buy area at 62 cents. Let's do this fib pull one more time. From the low of the pitchfork to the high that we rejected from. Let's put our fibs based off log scale because that's such a big move. Ah, man, that POC is just a little bit above that. That kind of sucks because our 786 is going to be just below it. Yeah, dang. Well, that kind of sucks, to be honest, that we don't have that confluence there of a golden pocket. You know what? Let's check something on this. Let's change this from a modified skiff to a skiff pitchfork because no, the other one was better. Now, the bottom of the skiff pitchfork is aligning kind of nice with the, by the time we get there, it won't be. Now, the modified looked better anyways. It was more respected. All right. So that is super for you. Super is looking super volatile as well. So be careful trading this. It looks like we're getting huge wicks on some of these time frames here. Let's zoom in onto the 4-hour and let's just look at this local price action. If you really wanted to, let me hide this big one. You could look at just from this low on December 24th. That's kind of the same range that Bitcoin's been creating since Christmas here. So we're losing our value area low on that. That doesn't look good. But we do have our range from December 24th. We have right next to the naked daily. We have our value area high up here as well. So that's, oh yeah, I already have the value area high there. What did I just do there? All right, so we took the liquidity of this here. We do have some liquidity resting down here, but there's not much down there. This pivot of liquidity here is resting near this box here. Super does look like it's going to continue down. Let me actually go onto the daily and let's look at Market Cipher B. Oh, wow. Okay, so Market Cipher B doesn't look as bearish as some of these other coins does. We are seeing now this isn't quite bull divs because this is a little bit lower than this one. But we are at a major weekly level that was a support resistance flip going way back here till, for the whole year of 2024. We look like we're bottoming out on our momentum waves here. So we could see at least a bounce here up to this level up here or even this level here. So super could be a good, if we do really locally in this area come down. We already came down to the golden pocket and we're seeing a failed bounce. So that's tough because we saw a failed bounce from there. But it is looking a little bit more bullish than like Bitcoin and some of these other coins that are seeing bearish trigger waves right now. Let's go to the weekly chart. We did have the weekly bear divs and our weekly money flows coming out. So even if we see a bounce from this weekly, I expect it to make a lower high before coming down lower to this, maybe to this naked weekly POC at 89.4. Let's see, one. How do we even count this? You'd want to see a much bigger impulse there. Dang, I wish I would have saw this though. Here. Actually, no, not that. Let me get rid of that. From the low to here. Bring it up to here. And the bust of that. Oh, that was a good accumulation zone right here on the weekly. Dang, I need to pay more attention to these coins. All right, so that's it for Super, you guys. I got to get going. It's getting late here. Everyone have a good day.